Hi everyone, I'm Kristen Scholler, Senior Content Creator at the New York Stock Exchange, and you are watching Taking Stock.
Two minutes to go into the close. Markets in kind of meh territory. Yeah, I said meh. I think that's the technical trading term. We are set to log here what could be 3 consecutive days of losses for the S&P 500, but volume is extremely low across the tape. Very much a market in search of its identity today. For followers of the so-called Santa Claus rally, we still don't have him yet. He has yet to visit us here in the hollowed hallways of the New York Stock Exchange and broader Wall Street. But on the day, strong sessions from energy, telecom, and utility stocks, all in positive territory, with losses in the S&P 500 to the downside being led by sectors like discretionary, financials, and technology shares. Welcome to the broadcast, one and all. You're watching Taking Stock live from the iconic floor of the New York Stock Exchange. I'm your host today, J.D. Durkin. Coming up in just about a minute or so, we got the ringing of the closing bell here at the big board. The team from Carnegie Investment Counsel here at the NYSE set to do the honors. They will also be on the show today. Fed minutes earlier today released from the December FOMC meeting showed us, in fact, a deeply divided Fed with regards to the future path forward on short-term interest rates. That put a little bit of upward pressure on the 10-year Treasury yield, up 1 basis point on the afternoon. Volatility is up. The dollar is up. The oil benchmarks today are up. The leaders for the Dow 30 include UNH, Boeing, and Chevron, and the laggards in the Dow, Goldman Sachs, IBM, and Cisco. Peter Tuchman will join us in just a bit, but first now, time for the bell. And for the final Tuesday of the year 2025, your final tale of the tape, kind of weak breadth across the tape overall. Decliners slightly better than advancers, but final tale of the tape, the S&P 500 will sell off on this trading Tuesday, 0.1%. The Dow 30 components down 0.2. The NYSE Composite Index had spent most of the day in positive territory, but selling off 0.08%. Lots of fractions today, Peter Tuchman, and the small caps down, let's call it 0.8. Let's bring in the Einstein of Wall Street himself, the institution inside the institution. This is weak breadth. This is weak volume across the tape, but what do you see as you look up for the markets in our final Tuesday of the year, Peter?
You know what? I don't like to use the word weak because there's nothing weak about this market. This market is closing out the year after 52 record highs this year across the board on all the indices, right? We've got the Dow up 24%, the S&P up 17%, NASDAQ up 25%. Silver up 1,000%, gold up 1,400%. There's nothing weak about those numbers, right? So one day does not make a market by any means. I think, it feels like everyone had such a good year. These are normally really busy days. I think everyone had such a good year that they're all on St. Bart's relaxing and already on vacation.
That sounds nice.
That's kind of my gut. I mean, yes, there's no breath, but at the same time, it's very shallow on the buy side and the sell side. Right? I think they've given us, coming out of the gate, if we sort of go over, the last month, I think it's impressive how we came out of the sort of doldrums of Thanksgiving, of that mid-November sort of cataclysm, I would call it, or whatever. And then we had good numbers on retail, and then we had the Fed chair, come around and do another cut. We did see some news today that was kind of interesting that said that they just passed that cutting interest rates by just a small hair. Yeah. That there was so much dissent amongst the rank that most people felt we did not need to cut. Now, what does that tell us? That tells us that the economy is actually doing better. Right? They cut interest rates as a reflection of a softer economy, right? And so the fact that nobody really wanted to cut, but they kind of just did it because it was maybe pressure from the White House and whatnot, showed that actually, the market is strong and the economy is strong. And it's stronger than people thought. And I think that's a good sign. So we're going to close out the year with a lot of positivity.
What are the other catalysts that you'll be looking for, not just for tomorrow, New Year's Eve, but as we turn the page here to 2026? We are expecting a good bit of kind of fiscal stimulus into the system from the reconciliation bill, right. Presumably a more dovish Federal Reserve than we've had in the past. What else do you look for to give you a sense on how the markets will shape up for the new year?
So, as I speak to my friend Dan Ives about it, we were trying to figure out, is this window dressing? Is this profit taking? Is this, what is it? What are these last couple of weeks? Because that, the market can do that, right? Markets that are higher up, people tend to have some rotation, there's some profit taking, there's some tax harvesting and whatnot. This year they didn't need to do any of that. What he believes people are setting themselves up with is a really bullish January, that people are basically setting themselves up for a really strong tech market coming out of the gate in January. Because we have a very dovish Fed to look forward to, that we do have a lot of reversal on that sort of positive, that negativity coming out of the data centers. We are finding that the next move is going to be an energy play around data centers and whatnot. So I think there's a lot of positivity to the first quarter being solid. So people are buying stocks not for any other reason that they want to position themselves into the gate.
I got about a minute left with you. Let's leave the markets to the side. Tomorrow we got one of our favorite big board traditions.
Yes.
Wait till the sunshine, Nelly.
Yes.
Comes Nelly. You've been down here a long time. What does this tradition mean for people who don't know? What does it mean to you?
So it means a lot to me, actually. I sort of was reflecting the other day that, I can't believe I'm that guy who's one of the big participants in keeping this tradition alive. By nature, I'm a humanist and a traditionalist, and so it's really exciting. We lost Arthur Cashin this year, and so we will be reflecting on that and honoring him in so many ways. The McGuire children will be here, the Cashin children will be here, and so keeping a tradition that goes back over 100 years, and basically the song, my understanding of the song, even though none of us know the words after 40 years, after 100 years, is that, in the times of darkness, that there is a light at the end of the tunnel. Yeah. And so even though this year there were times during this year, whether it was, the sort of self-imposed crazy mini crash in February, March, and April, and a number of times government shutdown and whatnot, that, at the end of the day, markets are resilient, humans are resilient, and we're going to come out of this year really strong. And so tomorrow we have 125 old members coming. We're going to be live on CNBC with Bob Pisani. I am actually filming it. I'm going to make a small documentary about it, which you're going to be in. Great. And we're going to have it, for eternity in the archives of the NYSE. So because a lot of these guys are in their 80s and 90s. Yep. I'm nowhere near that, even though they put my birthday up as a happy 80 the other day. But it's a tradition that's gone on and will go on forever.
And we're looking forward to, keeping the history alive at this tremendous institution. Nothing embodies that better than this annual New Year's Eve tradition.
Wait till the sun shines, Nelly. We'll all be singing it, and we still don't know the words.
And I hope maybe tomorrow's the year we finally figure it out.
Even when we print up the words, nobody remembers. It's great.
Thank you. We'll see you tomorrow for the song. Thank you for everything this year.
Pleasure.
Great to have you.
Thank you.
All right, Skylar, take your mic. Howie, you and I are going to head this way and head for a walk. It is time now for the second to last trading day. You could say penultimate trading day of the year, to give you a magnificent 7 scorecard, because despite the fact that these 7 mega cap, big, splashy technology stocks have really been most responsible for the 3-year bull run, so far this year in 2025, only 3 of them are actually outperforming the S&P 500. Alphabet shares up 64%, Nvidia up 38%, Tesla shares up 17%, and that's it. These other 4 names are actually trading below the S&P 500 in 2025. Microsoft 14%, Meta 13%, Apple 9%, Amazon 4%. They got one more day of trading to kind of flip some of those previous gains and to make them more gains, but we'll see what happens. All right, before we go to break, Howie, time to take a look at 2 NYSE notables. First up, Boeing, one of the best performers in the S&P 500 today, up 25% off of its November lows. The Pentagon in Washington, D.C. awarding various military contracts this week. Boeing, a key beneficiary of those contracts. Boeing shares up 24% from the start of 2025. And finally, Howie will take a look at what is unfortunately the worst performer in the Dow Jones Industrial Average here this year. That is UNH, also known as United Healthcare Group, set to wrap up 2025 as the worst Dow stock. Shares down 34% from January 2nd. Its market cap has fallen from $540 billion back in April to under $300 billion today. Although Berkshire Hathaway and Warren Buffett did buy over 5 million shares this year, we'll see what that does to juice investor sentiment as we head into 2026. Throughout this week, we are bringing you some of our personal favorite interviews we have done all year long here on Taking Stock, and this is absolutely right near the top of the list for me. Back at Money 2020 in Las Vegas, Nevada, a couple months ago, we ran into Michael Saylor of Strategy, formerly known as Michael Strategy, about his Bitcoin holdings and much more. Take a look. Who better than the great Michael Saylor to join us? You and I just ran into each other before we started the broadcast. I thought to myself, man, would I love to get the great Michael Saylor on the show. Lo and behold, you're willing to do it. Thank you for chatting with us here in Vegas.
Happy to speak.
So let's talk first and foremost, what brings you and the team from MicroStrat here to Money 2020 this year?
Well, I'll be speaking on the main stage later today, and I'm excited to be here because I'm going to speak about digital credit and building digital credit instruments on top of digital capital.
In what ways have you seen the broader Bitcoin treasury conversation really evolve? Obviously, I think you're the sort of person Wall Street points to and say, that's a man who saw where the puck was going, and now we're looking at much more widespread adoption with so many other players pointing to you as their inspiration. What did you see, Michael, before others saw it?
Well, I think last year when the SEC approved the Bitcoin ETFs, they legitimized the asset class. And the spot ETFs are the most successful ETFs in the history of Wall Street. Then earlier this year, the White House endorsed Bitcoin as digital gold, and that was March of this year, and that legitimized it as the apex digital commodity in the world and digital capital asset. The Financial Accounting Standards Board, FASB, endorsed fair value accounting this year, and so 2025 is the first year where digital assets are accounted for on a fair value basis. That was the third big milestone. The fourth big milestone is banking acceptance. The Secretary of the Treasury this year has pointed out that we want to be the crypto capital of the world, and Scott Bessent has been very supportive of Bitcoin and the digital assets economy in general. And that led to directions from the FDIC, the OCC, and Treasury that it's okay for banks to custody Bitcoin and to bank digital assets. We're seeing that happen right now. We're seeing a wave of institutional adoption in large banks like JP Morgan and BNY Mellon and Wells Fargo and Bank of America and Citi are all announcing pro-Bitcoin, pro-crypto policies. That was a pipe dream just 12 months ago. Right now, the exciting thing that just happened just today is that the S&P just gave its first credit rating to a Bitcoin treasury company just a few hours ago. Our company got a credit rating from the S&P. That's exciting because this year we launched 4 digital credit instruments, all backed by Bitcoin. And with that credit rating, that's going to unlock huge pools of capital that can now buy these credit instruments, and that will flow into the crypto economy.
You mentioned Treasury Secretary Scott Bessent. We talked about him a little bit earlier on the broadcast, sort of paving the way a little bit for a meeting between Xi Jinping and President Trump. How fundamentally different is this regulatory regime out of Capitol Hill in Washington? The fact you got members of both parties, as well as a Republican in the White House, who are willing to talk about these things in a much more legitimized way than even the old SEC and the old administrations. How notable is that difference from where you're situated, Michael?
Well, I think an enormous amount of energy went into shutting down innovation in the previous administration. So there were 100 ideas, and the view was always the cup is half empty, and this is the way that idea might go wrong. And this administration has embraced a very pro-innovation framework and philosophy. And so instead of dissipating huge amounts of energy with enforcement actions and suing the industry, they've actually taken the position of how is it good for America, how is it good for the world if we embrace digital capital, if we embrace digital currency, if we embrace digital finance, if we embrace digital securities, if we embrace digital intelligence and the digital transformation of the world. And I think what you see is everybody from the White House through all the cabinet and through all the financial regulators are more interested in how to make America the crypto capital of the world, the AI capital of the world, the digital capital of the world. And that's been very, very motivational. I think it's driving a huge amount of innovation throughout the industry. And, you know, I think the proof is in the pudding. You can see the industry's grown from $2 trillion to $4 trillion in 12 months. We've created trillions of dollars of wealth, and I think we've seen hundreds, if not thousands, of innovations launched.
Great, Michael Saylor, MicroStrategy. I told you earlier that Eric Trump and I were talking last week. He speaks so highly of you for sort of setting the pace for the broader Treasury space. Thanks a lot for joining us. It is great to have you.
Thank you.
Welcome back to the broadcast. You're watching Taking Stock live from the New York Stock Exchange. Time now to give you the latest headlines you need to know in the world of fintech, crypto, and artificial intelligence. First up, the crypto majors are all up here on this final trading Tuesday of 2025, but fractionally. Bitcoin up 1%, ETH up 0.8, Solana up 0.5%. Next up, SoftBank has completed its massive $40 billion investment into OpenAI, deepening Masayoshi Son's all-in bet on artificial intelligence. It marks one of the largest private funding deals of all time. And finally, at this hour, Meta set to buy AI agent startup Manus for more than $2 billion. It's a fast-moving deal that deepens Mark Zuckerberg's big bet on AI and also adds a revenue-generating agent business to Meta's stack. All right, join the show at this hour. Richard Alt is the CEO of Carnegie Investment Counsel, not just a terrific guest here to celebrate a little bit ahead of the New Year's holiday, but also a guest who just rang the closing bell. Welcome to the show.
Thank you very much. Thrilled to be here.
Of course, can I first get your perspective? What is the experience like for you and your colleagues to be up there, bringing about a close to the global financial markets today?
Yeah, it's a thrill. We're a Midwest-based investment advisor, and this is a little overwhelming. While we're thrilled to have participation in all our offices here, but this is the heartbeat of capitalism, so it's great for us to be here. Thank you.
Talk to us a little bit more about the top priorities for the firm in Carnegie and what 2025 has really looked like, Richard.
Well, 2025, we walked into the year with the idea that it might be a difficult year after 2 years in a row of 20+% gains, and we're on the cusp of almost a 20% gain here in 2025. We did do 2 acquisitions in 2025. We added an office in Stamford and one in Orlando, and looking for bigger and better things ahead.
I want to get your take on, correct me if I'm wrong, 50-year anniversary.
Yeah,
what does that mean for you?
Well, the firm was founded in 1974 by Prescott Ball and Turbin. We do get the question, my partner and I get the question about did we found the firm, but we would have been like 4 years old at the time, so no. But we became managing partners 17 years ago, and we were less than 200 million at the time, so we're at 7.5 billion today, so we're proud of our growth.
Absolutely. Congratulations on that growth and undeniable success. Carnegie, fee only, independent, 100% employee owned. How did that come together, and what does that mean for people in the family at Carnegie?
Yeah, it just means everybody at Carnegie participates in the growth of the company, and being a fiduciary registered investment advisor, we don't have conflicts of interest. We make investment decisions for the benefit of the clients. We don't sell products. We have no commissions. And we are fortunate to serve some wonderful, wonderful clients.
Can you talk to me a little bit about the longstanding relationship with the Malala Fund and the most important components of that relationship you would most want our viewers to learn about?
I'd love to talk about it. About 90% of our business is managing high net worth individuals. About 10% are nonprofits. One of those nonprofits happens to be the Malala Fund, and we're very, very fortunate. The Malala Fund, if you're not familiar, it's supporting the education of young women across the world, specifically in 9 countries. Half the world's population are women. The most free and cultured societies in the world are all where women have the most economic freedom and economic rights, and education as well. How do women get educated, get young girls educated? That's what the Malala Fund is all about, getting young girls educated.
Yeah, what an incredible initiative, and congratulations to the firm for your relationship there and all of the success. Richard Alt, CEO of Carnegie Investment Counsel, Happy New Year to you. Thanks for being on the broadcast.
I'm thrilled. Thank you very much. Happy New Year.
Folks, don't go anywhere. Much more Taking Stock coming up from the big board after this. Welcome back to the show. Time now for the headlines that you need to know in the world of startups, raises, and rounds. First up at this hour, NVIDIA set to license technology from AI chip startup Grok, and bringing Grok's founder and CEO in-house to NVIDIA. It's a move that could further solidify NVIDIA's grip on the AI computing race. Next up, ServiceNow is set to scoop up fast-growing cybersecurity startup Armis for more than $7.5 billion in cash. It's a major bet on security software. And finally, Alphabet buying data center developer Intersect for more than $4.5 billion. It's a cash and debt deal aimed at securing the energy and infrastructure needed to fuel its rapidly expanding AI ambitions. And now we continue our ongoing coverage featuring some of our favorite one-on-one interviews we brought you here this year from the New York Stock Exchange. And one of my favorites is when Shelly Kayat-Weston, the president of basketball operations for the one and only Charlotte Hornets, stopped by the big board. Take a look. Shelly Kayat-Weston is the president of business operations for the one and only Charlotte Hornets of the National Basketball Association. And I am so excited to say Shelly joins us here for a huge day at the New York Stock Exchange. Thanks a lot for taking the time this morning. It is great to have you here.
Absolutely. Thanks so much for having me.
Let's start first and foremost with what brings you and the Charlotte Hornets organization down here onto the trading floor alongside the great team with Judy Health.
Well, we are so excited to be here today. There's a lot of energy and going on. We have, first of all, I would say a tremendous amount of growth and momentum going on with the Charlotte Hornets right now. We have ambitious new ownership group with Rick Small and Gabe Plotkin that have set out a clear vision to be a premier NBA franchise. And with all of that, it takes momentum, right? And so we are excited today to announce a multi-year partnership with Judy Health, which you see here on the jersey in front of us. And so they are a line partner, and we're looking forward to a long future together.
Absolutely. I mean, the era of jersey sponsorships is clearly here, not just for the association, but for every major sports league. And it's something that fans are getting more accustomed with. And I got to shout you out because you do what I think fans really like, which is even the color scheme for Judy Health. It really closely matches what your organization has. And I think that's a point of frustration for some fans when their sports team throws a sponsor on and it clashes. And so, but even the design, talk to me about what this kind of looked like creatively to actually bring this division and this exciting product now.
Yeah, so you're absolutely right. You know, a Jersey Patch partner is one of those partnerships that really, organizations and franchises hold close to the vest. This is a conversation that started with ownership that we had with Jeff Peterson, our president of basketball operations, and our basketball operations team, because it's going to live on the heart of who we are, right? Our every single game, all year long, is with us. And so we wanted to make sure there was alignment. And based on the colors that you see and just how things felt with this partnership, everything was just perfectly aligned. Not only the colorway and how it looks on the jersey, but more importantly, the people behind the organization, AJ and his entire team, the values that they stand for, and just the fact that they're an innovative, driven organization and company. So there was so much alignment, and most importantly, we both are focused on the customer, on the fan. We really are striving to elevate our customer journey and experience. They're looking to change the game with their customers and how people access benefits and in the medical industry. And so we're excited about this partnership and alignment.
Charlotte is such an incredible city, a beautiful community of basketball fans and so many others in and around. What do you most hope and what are your expectations with regards to Judy Health and other partners that the organization has in its orbit in terms of what they mean, their placement, their relationship with the fans, game in and game out?
Well, you said it best. You just talked about the history of Charlotte. And the truth is that the Carolinas has a deep-rooted history of basketball and passionate basketball. Once early in the 80s when the team first came in late 90s, the Charlotte Hornets are actually the leading attendance leader in the NBA for consecutive years. With Del Curry, Muggsy Bogues, again, Larry Johnson. I mean, it's got a deep history. Also a history of pinstripe jerseys, which no other team did, the colorway of teal and purple. So it's got a deep history of innovation and being unique, but just a passionate fans in the Carolinas that love basketball. And so we're excited, I think, together of how we're going to touch our customers, how we're going to reach. Again, everybody wants to put the jersey on, so that's an important part of every fan, as you mentioned earlier. So it looks great. That's a first step. And more importantly, we want our fans in the Carolinas and throughout the country to feel proud of our organization and of the Charlotte Hornets.
Yeah, I am very grateful for your time and for being here. The jerseys look absolutely awesome. Congratulations on the new partnership with Judy Health. It's great to have you here today. Thank you.
Thank you for having me.
Welcome back. I'm Scarlett Sieber, and today's segment of Jargon Translator, we're going to be decoding a term that sounds like Apple's next big launch, but it is actually crypto's OG fundraising move. ICO, or initial coin offering. Oh, ICOs, the Wild West of fundraising, where fortunes were made and trust funds were lost. Picture this, it's 2017, Bitcoin is mooning, and suddenly every crypto project is like, we need cash to build the future. But instead of going to VCs or banks, they invent their own playbook, the ICOs. Here's the vibe. A startup creates a shiny new token, writes a white paper that promises to change the world, think Uber for blockchain, and then sells those tokens to the public. You send them Bitcoin or Ether, they send you their token. Boom, you're an early stage investor. Kind of. It's like crowdfunding meets Wall Street, but without the suits or the rules. No SEC filings, no IPO roadshows, just vibes and Telegram groups. And for a while, it was pure chaos. Billions raised, Lambos bought, and yes, scams everywhere. Why did people love it? 2 words, FOMO and moonshots. If you got in early and the token blew up, you were printing money. If not, well, you were basically buying magic beans. The next time someone flexes about getting into an ICO, remember, it wasn't an iPhone launch, it was crypto's version of Shark Tank, but without the sharks. That's your jargon translated. Back over to you.
Welcome back to the broadcast. With our remaining moment, get you quickly updated on what to expect tomorrow here on Wall Street, the final trading day of the year. It is actually historically one of the weakest days for the S&P 500. According to the Stock Traders Almanac, only a 28% probability the markets finish in positive territory tomorrow, but we will see what the tail of the tape is. Thanks for watching. We'll see you again tomorrow. Yeah.